Hello and welcome to Bloomberg Quint. We're at the TCS headquarters in South Mumbai talking about the company's second quarter earnings. It's been a very difficult quarter as the management itself has articulated. And I have with me the Managing Director and CEO of TCS and Chandrasekaran. Chandra, thank you very much for your time today. I'm going to contrast some comments that your company made in September. The words you all used were an environment or a customer outlook of abundant caution and one that was holding back discretionary spending. And in today's press release, you've said it's been an unusual Q2 and that it is an environment of growing uncertainties. Can you explain or elaborate on what you mean by an unusual Q2? And when you say growing uncertainties, the word growing seems to indicate that it could possibly get tougher from here on.
So I think the unusual quarter has to be interpreted in the context. First of all, Q2 is traditionally our strongest quarter.
Okay.
Every year we start with a good Q1, which is better than Q4. Then we post in a very strong Q2, and that has been the cycle all through. And this year we've had one of our poorest shows from a revenue point of view, which is a 1% constant currency on a sequential basis, which is very slow. And also, whenever we post a strong Q2, it's also a strong quarter for BFSI. Because BFSI, represents 40% of our revenue.
Of your business, yes.
So we just can't look at whether another business grew at 4%. It's very important for BFSI to deliver a strong quarter.
Right.
And when BFSI doesn't deliver a strong quarter, that has an impact on the overall growth. And we have delivered only 1.2% in BFSI. While you can say that BFSI growth is better than retail growth and etc., but BFSI 1.2% is so it's unusual from that respect. And also it's unusual because on a quarter in which we have had a major currency headwind, on a quarter in which we have got a very low growth, and on a quarter in which everybody knew that it's going to be a big margin headwind because of these reasons, we've been able to deliver an exceptional margin performance.
Yes, in fact,
that is a positive takeaway.
Margin and net profit have both beat expectations.
And wildly actually,
yeah.
Which is something that makes me proud because the teams have done a fantastic job in the areas in which they could focus on.
Sure. Okay. Growing uncertainties. I want you to elaborate. Do you think it's going to get tougher from here on? Again, I'm not asking for guidance. Yeah. I'm asking for your perspective as a business leader in this operating environment.
There are two different viewpoints I want to give you. Same viewpoint, but two different facets.
Yeah.
If you ask me whether as a business it's a tough business, no, it's a great business.
Sure.
The reason is that technology is the thing now. It is pretty much encompassing every single business.
Right.
I'm calling it business getting embedded in technology.
Sure.
And that's across sectors. It's not that we are only seeing in consumer base. 2 years ago I would say digital is more pronounced in consumer businesses, say in a retail, and it's coming to banking. But now it's BFSI, it's retail, it's manufacturing, it's healthcare, it's utilities, everywhere.
Yeah.
So it's very strong, and we are in a great place because we have the talent, and we are investing in the talent, we are investing in IP, we are investing in partnerships, platforms, startup ecosystems, and we have fortunately a very strong financial strength. We are finishing the quarter at more than 5.5 billion cash.
There's no doubting that.
So with all of that, I think we're in a great position to be able to capture that. So I think business is a great business and we will do well. There's no question. But if you come to what will happen to this quarter, what will happen to FY17, what will be a CC growth, will you do a poor CC growth this year? All those questions there are people will ask. But if you take from that point of view, I have to be very cautious, primarily because I don't know the softness when it will ease, because we want the ramps to happen in digital engagements. And I have to see signs of that. Okay.
And you aren't seeing any right now?
Yeah, because I've just finished the quarter and I've delivered 1.2%.
Sure.
So I need to see that. And also the thing that I have in mind is in Q3, definitely we have the US elections. I normally, you have known me, Menaka, for many years. I have never linked macro to my business, because I always decide my strategies, my plans, my execution based on what I hear from customers. Okay, so I will only take the customer data points. But I do want to be a little bit careful because you don't want to deliver a poor quarter from a revenue point of view and then say everything is going to be picking up. So you have to be careful. So I am careful to say that there is an US election. How much of that will have a linkage to softness, I can't predict. Second thing is for retail sector, which is also an important sector for me. It's because retail CPG accounts more than 15% of my revenues. And Q3 is a quarter in which they focus more on holidays and delivery of gifts. So operational efficiency is what they look for. They will be quite okay to say, okay, this new application will wait for next quarter, don't worry about it. It's not going to make an impact for us this year. It can come 3 months later, 2 months later. So those calls will get made. So I have to be careful to say that whether all these delays will get picked up in Q3 or not. So those are the two reasons I have. Yes.
So coming to United States, of course, we do want to talk about the US presidential elections, but for
everybody wants to talk about it.
Absolutely, absolutely. But I also want to get an understanding of your conversations with clients in the US. What kind of feedback are you getting right now? Are things about to improve? Will it take longer than just a couple of quarters?
How long will it take? Regarding what?
With respect to client spending.
See, I don't think that's what I'm saying. There is no budget cuts.
Right.
Broadly, they are not spending cuts. There is no client spend cuts. That's the distinction I'm making. But I'm seeing delays. In the sense that it's a program that's supposed to ramp up in, let's say, August. It's not ramped up in August. It's not that they are cancelling the program or they are not coming and telling me, oh, we were going to do this huge channel transformation, we are not going to do it.
Right.
So let's evaluate it next year after January so I'm not hearing that conversation, not even one. So it's a little bit of a tough spot where you think you should be growing better.
Right.
Chandra, if I can add, the systemic weakness in Europe because of where I think the Eurozone
But you've done very well in Europe.
I know, you've done better in Europe this quarter, but also in the coming quarters, we'll start seeing the full impact of Brexit, if any, right? Because as yet, it's only a sort of a promise that's been made to the people of Britain. It has yet to get operationalized. Typically or traditionally, Q3, Q4 are seasonally weak quarters for reasons you've already explained to us. So essentially, can we assume that if there is no big change in the environment in the months to come, in the global growth environment, and as of now it doesn't seem to be that there will be any change, that we will in fact see things get even tougher from here on? This is the best that you could possibly do in a tough year.
So from a Q3, Q4 perspective, broadly, I think your commentary is very important and very correct.
Okay.
The Brexit point of view, it's very difficult to quantify what the impact is.
No, of course, I get that.
To me, the Brexit impact is the currency.
Yeah.
Already
factored in.
Already from 95 rupees, it has come to 81, 82 rupees.
Yeah.
Okay, whether it will go below 80, we don't know. So whatever is the currency impact, that's something that we've got to bear. This India postponement will be a tailwind for us. And then some of these retail things, if they pick up in Q3 and Q4, some of it will come, trickle down in Q3, some of it will come in Q4, that is a tailwind. Those two things which we normally will not have in Q3 and Q4, we have that. But apart from that, I think your commentary is what we should take.
Okay, I have one more question before I hand it back to Agam, and that is that you've done about 130 basis point improvement in margin, okay, this quarter, which Rajesh, your CFO, described as on account of operational efficiency. You lost about 40 basis points on account of currency, which was the pound. Your net improvement in operational margins was about 90 basis points. These operational efficiencies, Chandra, are they sustainable? This outperformance that we've seen in margin and profitability, will it sustain?
What we have done is sustainable. None of this
will we continue to see more gains on this front, or what you've done is where we are now? So we'll be within the 26 to 28 band, which is your stated band, and you finally made a comeback to that.
Our intent is to stay in the 26 to 28 band.
That's fine.
So that's what we will do.
Yeah.
Whether from here the programs that we have put in place will see additional improvement in margin, we can't say.
But operational efficiency is what? Cost cutting, basically?
No. It's I think it's not necessarily cost cutting, because most of it has come in the execution, which means productivity, not cost cutting. Whether it is using tools, whether it is automation, how best we can resource the project mix in a lot of levers.
Okay, Rajesh said realizations have improved, the mix has improved, higher margin businesses like consulting have improved this quarter. Again, these are all sustainable, or
No,
how is it going to work?
these are all have contributed structurally. All we are saying is that we have gone to 26% in a structural manner, in the sense that that will stay.
Okay.
We don't have to, it's not that we have done a one-off and then we have to try very hard to do a one-off again to stay at that. But whether from 26, how much it will go, how much more improvement we will do, we'll leave it at that.
So I understand TCS is very disciplined in its pricing, but I also want to know whether or not there has been a change in the pricing environment in the industry, and hence could that have a potential impact going forward in the next couple of quarters?
There has always been a change in the pricing environment.
Okay.
There has always been deals which we cannot support.
Right.
There has always been situations where somebody is irrational. It is not today. It has always existed, and I have seen it. I've been here around for some time.
Right.
And as a CEO and even before as COO. So the best thing that you can do in these circumstances always is you should know where you want to play and when you don't play. And as long as we have it in your mind, then you can do things. When you don't have it in your mind, you will always blame, saying that, oh, somebody is cutting price, and somebody will always do.
Okay. Chandra, I know you have an analyst conference call to attend in about 1.5 minutes from now. So I'm
Yeah.
going to ask you two very quick questions, and if you could give us two brief answers to that. Is it my imagination, or have the deal wins resulted in smaller deal sizes in the recent last 2 quarters, last quarter and this quarter?
No.
Is that a function of more focus on the digital business? Because you warned us before that in digital the deal sizes are typically smaller than in large outsourcing.
No, when we announce the deal wins to you, unless or otherwise it is a material size, we don't announce.
Yeah, but they're not like they're in the 20 million.
No.
I'm not scoffing at 20 million. It's still a large amount, but
We,
it isn't
we-
like the
we-
deal sizes
no,
have gotten
no, no,
smaller.
No, we announce only those deals which are substantial in size.
Okay, so digital seems to be on course, right? Is that a fair one
course.
to say? Because
Absolutely
there's
on
nothing
course.
dramatically new in this
Yeah,
quarter to talk
absolutely
about.
on course, yeah.
So one final question before we say goodbye to you and hand you over to the analysts. As a business leader that does, of a company that does substantial business with North America, with the USA, who would you pick as the best presidential candidate there, or the person for president? Would it be Donald Trump or would it be Hillary Clinton?
It's a very hypothetical question.
It's not hypothetical.
I
Americans are faced with the question
I
right
don't
now.
have a vote.
You don't have a vote,
And
but
so-
as from a business environment point
And
of
my
view.
views don't matter. So
From a
I have no-
business
I have no-
environment point of
I
view.
have no choice. I have no
All
choice.
right.
Thank you.
All right. Thank you so much, Chandra, for your time. Thanks.